Good morning, guys, and welcome to today's edition of the London Session Open. Today is July 27th, 2020, and it's almost 10 a.m. in London, and we have about 10 minutes to provide you guys with a quick update on the markets. And if you're new to this, my name is Alejandro Zambrano. I'm the Global Chief Market Strategist with ATFX UK, and I've been trading since 2006, and I'm quite good at what I'm doing, so hopefully I can help you guys as well to achieve what you want to achieve with your trading. All right, so we are going to take a look at things like the euro dollar, pound dollar, dollar yen, Aussie dollar, New Zealand dollar, dollar CAD, gold, crude oil, and stock market indices like the German DAX and the Dow Jones, but also the Nasdaq 100. Of course, we're going to take a look at some of those crazy markets like silver. As you know, I had a few bullish ideas on this, and they've done much better than I thought it would do. In fact, I closed out a bit early, it looks like, but it is like that sometimes. Still been a really good year, and I think 2020 will deliver more of the same because COVID-19 and the way that is playing out. So we're going to talk a bit about that. Now, again, if you're new to this, don't forget to subscribe, don't forget to hit that bell button, don't forget to hit that like button as well. All right, let's dig in, and we're going to begin with the euro. So the euro, much like the price of gold, has just been going upwards, right? So this is a daily chart in the euro USD. So you can see that over the last, from the low here in June, we're up with about 5% or 560 pips. From the very low of the year, we are up with about 10% or 1086 pips, and we're also higher now than the highest from 2020. So we're now pretty much at the same levels we've seen here in 2018. The next major high on this chart is this level here, which is the high, a high from September 2018. Now, I've been looking for a pullback, and when the markets are so fast the way they are now, you don't actually have proper pullbacks. You see, here we went up, had a mini pullback, and then it went up, a little pullback, and then such a steeper one, but we don't really have strong pullbacks right now. Now, for now, the market is just rallying upwards. There's not too much we can do except trying to catch it with maybe something like the 1 hour chart. The biggest problem with the 1 hour chart, it's going to go up and up and up and up and up, and then it's going to be a big slam to the downside, and then it's going to wipe out many short-term traders. Now, if we stay on the sidelines and just wait forever, we might not have an entry, and that's why I'm looking at using the 1 hour chart today. Now, there's two levels to watch. You have the low here from Friday, then you have the low here from Thursday. The low from Thursday is more important than the low from Friday because this is a shallow low, and just below it here you have this other level. Now, in the very short term, these are the levels as well that, you know, that we open here on Sunday. If we come down to 1644, I think people are probably going to be looking to buy here and then looking for this to head upwards. Now, the two levels either work with Friday's low or this low here. How would I deal with this? I would see what's happening when we are here. If you're looking at gold and everything is just coming down crashing, then buying here at the first level with stops here doesn't make too much sense. Maybe buying with a stop down here, and maybe even allowing this to go all the way down to 1592. So 116 really would be better. So looking to get involved with 116 with stop loss orders just below 1536. So that's what I would do. Unfortunately, right now I don't have, I don't know what's going to happen when we are down here. And what we added, let's just talk about gold. So this is gold as well, and you know, the very last solid setup that I talked about was buying on the break here to this little rectangle here, and you know, we had multiples of that. It's like an amazing move we had in this market. We have, of course, talked about already to buying here as well, and in fact I've been bullish since this was in October 2018, and then of course I've been a bit bearish here, but then turned bullish here. And you remember this? When we were trading down here at 1365, I said we have a massive inverse head and shoulders, and we can go upwards. Well, look at this. We're now at a new all-time high. And again, the market here, much like the euro, is just gone into like crazy mode. You see, we have almost no pullbacks. So if you're looking for good risk-reward ratios, the way I am looking at them, which is really the best way to survive in the long term, we're not really having too many chances here, and it's just going upwards and upwards. like if anything, like 30-minute, maybe that's it. You know, you have a little rectangle, then you have a breakout, you have break to these prior highs, and that's it. So I don't really want to chase that, but you could chase it if you wanted to. And for now, the last low is here at 18.95, and I can take a fib like this, and you can see if we go down about 50% to 19.13, then that would make sense. You can, if you want to, if you really want to push it, you know, even in the 5 minute now, you had little sideways action like that, and then you have this level here, and you just took out that level. Now we're revisiting that breakup point. This might be sufficient. This might be it. You know, maybe you should just be buying here and just target the upside. There's a big challenge with that though, and that is that at one point it's just gonna come a big sell order, some panic or something, and then we're just trading much lower. That's why I'm waiting for that pullback. All right, this is the Aussie dollar versus the USD. Last week we said look to buy here. The market went upwards. You know, there's nothing wrong booking a bit of profit here if you want to. Ultimately, I think we can go a bit higher. I would probably book most of it around 71.65, and if we do revisit the lows again, then this would be the level to watch. So this is 70.70. Remember, last week we had a stop loss down here somewhere. Now it's been reduced, so it's just here now at 70.42. So very good. And you see on dollar versus the USD, we said look to buy here, but we missed that with just a few pip. And I will continue to be bullish, and I will continue to be bullish as trade long as trade about 66.02. I think if we go down to 66.34, I think people will buy, and then we're probably going to see this go upwards. And if we take a look now at the GBP versus the USD, the GBP versus the USD, we had a nice little ascending triangle, resistance, resistance, resistance here. We had that break on July 24th. That target of that target of that pattern is still up here, so we still haven't reached that. That's 28.79. The idea was just to buy on dips, and I will continue to do that. I'm just going to lift this a tiny bit to 27.90. So 27.90, if you didn't buy on the breakout, 27.90 is where I will be looking, and I'm just going to remain bullish about 27.12. Then hopefully we can trade to the target, and then maybe we'll trade all the way up to these levels here we haven't seen for a while. So you're looking at some of these levels here from March 20. What is this? Yeah, March 2020. Dollar yen. Dollar yen is definitely interesting. Dollar yen is something that I'm watching closely because I don't know if you remember, we said a break to this level would trigger head and shoulders. We did head, right shoulder, and some sort of a left shoulder here. We trigger that. We are now going lower, and we don't know if it's going to go all the way down. Hopefully we'll go all the way down. We had the initial break on Friday, then we had a correction on Sunday. That was probably the best opportunity to go short again, and now we're in lower. Now if we're lucky, it'll come back to 105.99 again, and people sell here, and then it'll target the downside. 104.50, 104 is a very good level to put partial profits, and I'm just going to remain bearish below 106.61. If we take a look now at the German DAX, the German DAX slid quite sharply, and with the initial buy spot, it just went straight through there. We're still in the second buy spot, and I will continue to be bullish above 12,768. If we look at the Dow Jones unfortunately did trade below my trend funding level. So we said look to buy here for this to go up. That went well. Then we revisited that and unfortunately traded below that low, which would have been the trend funding level. And now, you know, it is what it is. We traded lower, and it's a little bit messy, the charts. You might say, why is it messy? Well, let me show you why. So worldwide cases, you can ignore this for now, but worldwide cases trading straight upwards, right? So you have this like a new maximum of 288,997 new cases on July 24th. Number of deaths are going up a bit as well. We had, unfortunately, some 7,121 people dying on June 22nd. A lot of this, though, is happening in emerging countries where people don't really know exactly what people died of. We just know that after the fact, so like in a few months' time or something, when you can look at the averages to how many people usually die and so on and so on. In the US as well, we're going upwards in COVID-19 cases, and that is, scaring people. In fact, we have higher number of deaths. We have a bit of an uptrend. It's not massively there, but it's going upwards. The problem is this: the more and more people get sick, and if we continue to get sick like this, hospital beds will dry up really quickly. And when they do dry up really quickly, you have a situation where you will not be able to take care of people. So people that should have made it wouldn't be able to survive, just because people are there's just too many people. And there was mentions, and people got actually a bit scared about this last week. The initial jobless claims rose to 1.41 million last week versus 1.31 million anticipated. And this is the first rise we've seen in, I think, about 4 weeks. And people say we'll see worsening of this. So you want to keep an eye on this for next week, or for this week. Do we have higher than 141? That can show that, the COVID-19 situation is, again, influencing the US economy in a negative way. And some people say this is the reason why Euro USD is going upwards and why the dollar is weakening, because at least in Europe, they have some sort of control, even in places like Spain now, they're shutting down some places and it's going bad again. But in the Spain, I think they have maybe like 700 to 1,000 cases per day. Again, in the US, they have 75,000. So it's like a totally different ball game here. But this is scaring stocks a bit. And we'll look at the NASDAQ 100 in a minute or so, and I'll show you what's happening there. Other data from last week was actually better than expected. The composite PMI from the Euro area, UK and US were all better than expected. Euro area was 54.8. It means that we're back. Nice solid growth compared with June. Then you have the UK is doing really good with numbers of 57.1 from 47.6 prior. So this is really, really good numbers. In the US, they creeped up about 50, which means that it's unchanged from June compared with July. And we'll see, again, initial jobless claims are probably going to give us a good indication what's happening. So you want to keep an eye on that. For this week today, durable goods orders out today. Then you have Aussie inflation figures. Those are important as well if you trade the Aussie dollar. You can get some good volatility around those. Fed rate meeting on Wednesday. People don't really think they're going to do too much. If they continue to pledge, quantitative easing to infinity, that they're going to support the economy, then that is something that's probably going to keep gold and silver bullish. Initial jobless claims, I think that's the most important thing for stock markets, durable goods orders as well. And then you have GDP numbers for the second quarter, where the annualized number anticipates an outcome of, well, economists think we're going to see an outcome of 35% slide, which is obviously a massive move. All right, we're going to wrap things up. We're going to focus here on the NASDAQ 100. So the NASDAQ 100 hit a double top and then actually breached the low levels here. But one shouldn't just discard an uptrend easily. And last week we slid quite a lot. We did slide a little bit, but that proved to be a false move. I think we need to give this more time to mature. You can, of course, sell on these highs. But guys, the average retail investor has been bearish. They're not really good at trading. So you need to be very careful. So on the way down, the average retail investor was long, while the NASDAQ 100 and other stock markets were going down. Then they got it right here. So they got the first little bit here, but from here, they started to say, well, the situation is a downtrend, right? We're not going to improve. So from pretty much here all the way to the upside, the retail investor was losing money because they're probably thinking the same way as many retail investors are thinking right now. And that is that they're saying there's too many, the market has risen too fast. And yeah, I probably has risen too fast, but everybody had the same argument on the way up. We can't just use that argument to short sell. You can't definitely use the debt issue or all of that as an argument to sell. It doesn't just work. And I've been doing this since 2006, guys, so you need to really trust me on that. What you really want to do is you want to trade with the trend until proven otherwise. And right now, this is still a trend. And we don't even have a proper pattern to short sell here. You could, if you want to, again, try to sell around the highs here if you really wanted to. But again, that's what the average investor has been doing. And they've been losing money throughout this period. Instead of just taking it easy, just go with the trend, make some good money because the market is up with some 63%. Instead, some people have been losing. All right, we're going to wrap things up. If you do have any questions for me during the day, don't forget that you can follow me at ATFX, at AlexFX00. As well, don't forget to subscribe to the ATFX YouTube channel for more updates like this. Have a great day, and I hope to see you guys soon. Bye-bye.